Stay tuned to learn more about student interest in blockchain technology. Reimagine 2020.
Hi, my name is Miko Matsumura. I'm a co-founder with the Evercoin exchange, as well as a general partner with Gumi Cryptos Capital, which is a venture capital fund. I'm excited to be here at Reimagine 2020. There's a lot of seismic changes happening in the economy, and obviously this will have a really interesting impact on the future of technology and society.
Hey everybody, it's Patrick McLain again, one of your hosts for Reimagine 2020. I'm very excited for this interview, and if I were to give a few words why, I lived and breathed in the Silicon Valley world for a little bit, and ever since I've come into crypto or blockchain, I see some distinguishing parts where I see in the tech world, maybe there was a lot of lessons learned and a lot of experience, and there was kind of the wild west of crypto. And I've always thought that the crypto world could benefit from people who have kind of been through it in a variety of fashion, whether that be, investment, building real companies, execution, and what it really means to succeed in a technology product, right? Whether it's you want to build a Tinder app, you want to build a blockchain application. So very excited to bring in Miko. I'm not going to waste time probably butchering much of his background. I think I'll let him do himself justice. But Miko, how are you doing today? And tell everybody, a bit about your background and how you kind of came to this point in blockchain.
Yeah, absolutely. So I guess my background is from open source software. I've been in Silicon Valley for about 25 years. Originally started with helping to introduce the Java programming language, which I think should be pretty familiar to most folks out there. It's being used to run banks, and it's a pretty established programming language by now. I've been here in Silicon Valley for quite a while working on open source software startups. And really, I just got my start a couple of years ago into the blockchain space by being a co-founder of the Evercoin exchange, which you can find in your local app store. It's a downloadable mobile wallet and exchange. And then since the space was kind of expanding very rapidly, what ended up happening is I got recruited in as a general partner for a blockchain venture capital investment fund. So I've been actually a couple of years in venture capital, but the majority of my career I've spent here in Silicon Valley, mostly working on the entrepreneur side.
Awesome. And for all the students listening, for all the general blockchain enthusiasts, I'll encourage you to pay attention probably for what you hear through this interview. I have a feeling that it's going to be something that you're able to detract value from. And I'm very, very excited to be able to have this conversation. So let's go ahead and kick this off. I think I want to start with one core point, which is, I think if you go back to 2017, early mid 2018, there was a lot of money being thrown around. We could look back, obviously hindsight's always 2020. I think we had stumbled on potentially a new funding mechanism, right? Which wasn't necessarily bound to accredited investors or all the traditional roadblocks that most people needed. We could debate later whether those roadblocks were necessary, whether they were actually security roadblocks or hindrances. But if we cut out all the bullshit, there was a decent amount of scams, and I'll say it for myself, and obviously Miko, you can give your perspective. When I look at Silicon Valley and that traditional investor, the institutional investor, the fund, the VC, the angel investor, when I was kind of calling back to Silicon Valley and hearing temperament, there was a bit of pessimism or a bit of hesitation. I think, especially if you call it, end of 2018, mid 2019, maybe that sentiment has changed a bit. And that's what I'm going to get your thoughts on, Miko. How are the investors who have been really fueling the last 1 to 2 decades of technological innovation, how are they thinking about blockchain currently?
Well, I think it's important to understand that investors, especially venture investors, are very mixed group of people. One of the ways that venture investors make extraordinary returns is by promoting contrarian thesis points. And so, for example, if you look at Andreessen Horowitz, they just raised their second blockchain venture fund to the tune of 515 million under the leadership of Chris Dixon and Katie Hahn. So, really excellent, top quality investors. And, I think in a way, their participation in this is fairly symbolic, because if you look back into the annals of history, Mark Andreessen, one of the name partners in Andreessen Horowitz, of course, worked at NCSA, at Champaign-Urbana, and on the original Mosaic browser, which was really the first web browser that achieved sort of significant popularity, and it was coming out of an educational institution or university, right? So, if you're students watching this show, you should definitely think about the impact of what you can do, even working on new protocols and emerging protocols. So to me, when I look at the contrarian thesis and the way it's constructed, it does appear that Andreessen Horowitz believes, as I do, that we're seeing the birth of new low-level internet protocols, and that they're internet protocols that have to do with the transfer of value rather than the transfer of information. So I think that that's really the meaning of the blockchain. And I think that if we rebuild the internet on the basis of transfer of value, you're really talking about a huge, many times larger than the internet phenomenon from the perspective of social and economic impact.
So to kind of play off that, and I think you have a unique perspective, how are institutional investors kind of thinking about blockchain? And I would assume obviously it has evolved, but like, what would you say their view was in late 2018? What would you say their view was in mid to late 2019? And do you think their view now has evolved like a few months later?
Yeah, so I think the thing that's really interesting about this kind of asset class, and if you look at this notion of an institutional investor, what you have is you have a lot of heterogeneity even within that class. So within, for example, venture, I mentioned that there's Andreessen Horowitz, right? But obviously there's a number of venture firms that actually, changed their tune over time. Some of them went in, some of them came out. For example, there was a trend for a while around what were called professor coins, right? So, if you look at these kind of Algorand style coins, what you're talking about, or something like Avalanche, which is a different one, there's a variety of different professors at major universities that kind of launched coins. Now, what happened with the launch of professor coins is the venture community responded to those by essentially doing what I think in the history of venture capital is now viewed upon as being overpaid, right? Which is that these were achieving kind of token network values of maybe 40 million, 50 million, 100 million, 150 million, in the form of like a Series A, skipping over the seed stage, the friends and family stage, the pre-seed stage, right? So really, these are kind of highly, highly, highly valued on the theory that there would be a quick impact and a quick time to market, a quick time to liquidity. So I would say that that's the venture class. But when you refer to kind of institutional investors, you're really talking about kind of another even more large and heterogeneous class of investors, right? So if you look at those, for example, traders. So, we co-invest with CMT Digital out of Chicago, and, they're very close to, commodities trading and things like futures trading, right? So that's an entirely different class of institutional investor that has more to do with institutional trading and institutional folks like hedge funds. So within that space, again, what you're seeing is kind of contrarian asset providers, right? So the point being that I think from an institutional perspective, this continues to be somewhat speculative as an asset. I do think that what we're beginning to see is that people will introduce it into their basket as a hedge. So there's sort of small ownership from more mainstream institutional investors. Example of that would be someone like a Fidelity, who's making actually substantial investments both on the venture side as well as on the trading and even on the mining side. So, you are seeing institutional players coming in. It's really over time what's changed is through these different waves of Bitcoin price volatility, the market seems to be continuing to figure out kind of how this asset plays out.
Got it. And to kind of unpack that a bit and maybe zoom out, I think if we say, and maybe we'll come back from institutional investors and say, the angel investor or venture capitalist or someone with a 20, 30, $40 million fund 1, 2, 3, whatever.
Yeah.
I kind of laugh where it's like, on one half I'm saying, okay, Andreessen's signaling to the community, we're putting in 500 million. I'm imagining this is a bit of a green light, right, to a group like Silicon Valley, right?
Sure.
And I've always been shocked at like when I'll talk with my friends or, hey, some guy has a $20 million fund and I don't touch blockchain, right? I've heard that a lot,
Sure.
And it almost seemed to me like somebody saying, I don't touch SaaS. I don't touch AI, right? And I think anybody involved in crypto is probably living in a bit of a bubble where we think we're mainstream to a certain extent, when we might not be mainstream to other people.
That's right.
But do you think we've kind of gone over that hump, or we're getting to the point where we're going to go over that hump where anybody with a portfolio of technology companies is now saying, I need to look at blockchain because every signal I'm seeing is kind of telling me to go that way?
I don't think we've crossed the chasm yet, to be perfectly honest. But if you actually look at the applications that we've seen to date, right, we're really talking about kind of the emergence of the transfer of value. And what you really have to pay attention to in value transfer is you have to pay attention to sort of, in the most general sense of the term tokenization. When I say tokenization, I'm referring to an entire class, not just so-called security tokens or not just asset tokenization, but including Bitcoin, right? So what we mean that how do you represent the value and the movement of value across the network? So once you have this kind of concept, then what you need to understand is, how do tokens represent value? How do they retain value? And when you start to kind of dissect it that way, what we really seem to see there being kind of three kind of applications, 3.5, right? So I would say that 3 applications that have emerged. One of the applications is obviously Bitcoin. So, the market is still, even in the stages after more than 10 years, about 12 years, figuring out what Bitcoin is, which is an amazing thing. The reason why the market has struggled so mightily to understand it is that it's new, right? So, if you compare Bitcoin to anything else, it kind of resembles gold to some extent, but obviously, if you go to Venezuela, there was this event where the, regime was trying to fly a 747 full of physical gold, to Europe and was obviously stopped, right? And so the transportability of physical gold is a little bit less, whereas the transportability of something like Bitcoin is a little bit more. So, but it's comparable in some ways. As sort of a risk off asset. The thing that's quite different about it, though, is that as a so-called store of value, what you have to pay most attention to is something that hasn't played out enough, which is the long-term moving average, right? So what you're seeing with it as a so-called store of value is that you're seeing volatility. So if you see price volatility, then it kind of decrements its ability to be a store of value unless you think about it as a long-term store of value and you just ignore local volatility, which is an action that Bitcoinists call hodling, right? So, it feels like hodlers are basically in the mood of ignoring medium-term volatility and just looking for this kind of long-term moving average, right? On the thesis that money printing by governments, which is at an all-time high, will cause eventually the ratio of US dollar to Bitcoin price to change, right? So I think that's one application that seems very clear. Another application that seems very clear.
We know Bitcoin works.
Bitcoin works.
More or less, we got this
Absolutely.
one down. Yeah.
There's no question, right? So I'm being very conservative about this, but again, you're kind of talking about the lens of institutional investment, which is conservative largely, except for the contrarians, right? So, Ethereum is clearly a functioning mechanism. The programmable money applications, I think, are really focused on things like lending and obviously DeFi. So those applications are obviously kind of hot. There's very few other so-called, I would say the D-app mentality is not really taken off at all because it's the wrong mindset. It's not about D-apps. It's really about storage, transfer, and transformation of value in contracts. Like that's basically what it's about, which is a limited thing, right? Like, like if people are like, oh, let's have video games on the blockchain, right? So it's like the only meaningful part of it will be the storage, transformation, and contracts associated with the transfer of value. It's storage, transfer of value, and transformation of value. So, that's the internet of value. So, if you look at the Ethereum network, one of the supposed things that happened that you mentioned earlier is the whole ICO phenomenon, which is the wholesale transformation of the kind of capital formation and market access. And, I think it was premature, and I think the regulators were not enthused about ICO, and they continued to kind of pursue companies like Telegram, who, kind of maybe got ahead of themselves. So, with respect to kind of like how people view this emerging asset class and blockchain, there's definitely, it hasn't quite crossed the chasm as yet, right? Which means that there's a fairly small number of applications that would be considered killer. Another killer application is so-called stable coins. So I think that's extremely meaningful because it provides a function of, stable transfer of value, and international remittance is another use case for that. So, when we talk about these things, I think the thing that's important to understand is that because the killer applications have been somewhat domain limited in the range of things like financial services, it feels like we're still in the early days. So that people are really investors are very timing sensitive, and the market tends to kind of reason about things on a fairly short kind of 1 year horizon. I think what we'll see in 2020 is probably a Bitcoin all-time high based on the halving, and also based on kind of government money printing. And I think this will actually help lift all of the boats. Because I think the jury is out when you actually look at the overall history of Bitcoin price. What you want to establish is you want to establish a kind of 10-year moving average that just goes up, right? So, I think that's yet to be established, but I think that, if we have another all-time high, I think that'll be pretty clear.
100%. And obviously there's a lot of things to unpack there. A few other points I want to get to, but I want to stay on this one for a second. And my rationale for it is part of this, what we're doing, I think, with this conference and the elevated conversation we want to have, I would like people to understand. I want people to not make the same mistakes again. Yeah. So I guess I have a question. I'm kind of saying that I think there's still a large portion of angel investors or VC funds or whatever that just kind of they just have like a sign on the door that's like, we don't do blockchain.
Yeah.
Do you see this?
Yeah, for sure. To me, blockchain remains, I would characterize it as a contrarian thesis. And so it is something that you either get or you don't get. So, I have plenty of conversations with kind of so-called mainstream venture capital investors, particularly.
But yeah. So not to know, but they get money, right? So I feel like maybe sometimes they're like, oh, this might actually be a money-producing thing, but they still have like a stigma. They're like, I don't do blockchain, right? Like,
well, I mean, let's put it this way, right? Which is that if you really look at the quality of entrepreneur that historically over the past years, the blockchain has drawn, it hasn't been uniformly of high quality. So the kind of signal to noise ratio for venture investors in blockchain is poor, because there's a very large number of low quality investment opportunities, and there's comparatively fewer high quality opportunities.
So that's a really good point, actually. Let's unpack that. So when you're saying that the plethora of opportunities or founders creating, valuable companies, that there's a mismatch between supply and demand of like quality and capital that can be deployed. So how would you define, like, obviously you have a history of seeing enough founders, right? And even in Silicon Valley, like very few founders win, right? I'm always shocked.
Of course.
Everyone's like, I'm going to win. They raise $5 million and then 12 months later they burn it all and they do nothing, right? I mean, unfortunately that's the case of 95% of ventures, right? So
sure.
To a certain extent, we have to build in the fact that innovation isn't easy. Innovation comes with failure. And I see the same thing. Is this a unique thing where you're like, I consistently see characteristics of blockchain founders that that are lacking characteristics I see in other non-blockchain or just general technology founders?
Well, I would say this. I would say that there's a bit of a squeeze, and the squeeze is between two groups, right? So on the one hand, you would have kind of, I would call it the vegans, right? Which is this very kind of academic, mathematically oriented, it's probably, if you look at the open source movement, there's very strong open source credentials and tendencies there, so if you look at opportunities like that, I would say that, like, it's sort of, the epitome of that is kind of Ethereum, and I think that that's an exceedingly valuable, powerful, and intellectually sound, blockchain project. But, it has the kind of tendency to be kind of thought of in a nonprofit context, because of the open source heritage. So, it's, for example, if you look at Ethereum, aside from just taking US dollars and buying Ethereum during the ICO for 14 cents, like, there's no venture investment to be made specifically in that project, right? Obviously, there's Ethereum-based projects that kind of are downstream of that, but that's neither here nor there. The other side of the coin, though, are that there are kind of much more carnivorous and kind of capital intensive and, much more kind of economically greedy companies that exist in the blockchain space. But unfortunately, that side is populated also with a lot of people who are just trying to make a quick buck and, pull off some kind of a exit scam or do something that is, maybe not sort of a productive of a venture class company, right? So to me, there's a bit of a squeeze, right, between sort of the greedy people and the academic people, and it's a very weird and polarizing environment from that perspective, So what we look at is as an investor, my fund, Gumi Cryptos Capital, invested in Evercoin, which is the company that I started. And, Evercoin, my co-founder is like successful serial entrepreneur. So we both live in Silicon Valley. We put decades into building startups. That class of sort of investment target is sort of more uncommon than it is common. I think the reason why is that new infrastructure tends to serve people who are underserved, right? So what it means is that if you have experience and you're a serial SaaS company founder, you're probably just going to start another SaaS company, right? The people who want to do blockchain companies may be people who feel like, well, I pitched a SaaS company and nobody wanted to fund me, so they're not being served by the existing infrastructure. And so now they're kind of on the hunt for new infrastructure.
100%. One thing that called out to me is you were talking about Ethereum, and I was having a conversation earlier. I was telling one of my partners that I think one of the things that actually set Ethereum aside is really, the arm of consensus, right? Like that ability to execute and kind of form government coalitions or really create, ecosystems and specific verticals that, they were able to kind of foster applications is, I would attest, has probably been a decent portion of Ethereum's success, right? Without that, maybe wouldn't have seen, as much traction or as much traction as they've seen. And I guess to go to my next question, and I kind of want to pivot off this point, but I really do. I think there's like something unlocked here. Like when we think about what, let's just call them traditional Silicon Valley investors, right? Just for a general term, like, why do you think, like, what are the specific reasons why they were, outside of just saying we didn't have the best founder or the best leadership team? Do you think there were specific actions taken? So companies raised money through ICOs, they had poor legal documentation, there's obviously regulatory uncertainty, there's scams. Is that stigma still around? Like, is that still bound to blockchain, or is that still bound to kind of decentralized finance?
Yeah, absolutely. I mean, people have long memories about money, because if they lost money, then they pretty much, let's say someone gets scammed, or let's say somebody gets hacked, or let's say, right? So the important thing to try to understand is kind of how do people experience that learning, right? And the thing that's really interesting is largely speaking, if someone gets scammed or hacked, the lesson that they learn is don't go anywhere near blockchain ever again, right? So there certainly have been a number of individuals that have kind of been burned by the industry and by the scammers in it or hackers in it. And I think those people have largely kind of retreated, and now they're forming kind of a resistance level, right? So when people talk to them about Bitcoin, their response is kind of, don't talk to me about Bitcoin. It's full of scammers, or it's full of hackers, or it's full of, right? So obviously, that's going to produce a resistance level. So, I think that technology innovation kind of inoculates itself against that kind of thing. The thing that we need is we need kind of like continued advantage breakthroughs in innovation and in software delivery and applications. And, we need to see more utilization.
So it's funny you mentioned that. I think when we started what we're doing with MouseBelt, I think we started with like 10 schools, and it went to 30 and 50, now we're over 100, right? Like beginning of 2018. And I'm looking at it and I'm like, okay, where's the talent pool, right? And we started going and saying in early 2018, there's virtually no universities are having accredited courses, right? So then I start seeing that on each campus, there's on-campus organizations being formed, right? Mm-hmm. Now, what's funny about that, I was on a call yesterday with one of the presidents of the Blockchain Education Network, Ben, and they're recounting stories to me where schools, right? And so I'm realizing right now as you're saying it, I feel like blockchain can't get around from scams, right? So it's like as schools are trying to push it, or students are trying to push on-campus organizations, I'm hearing stories of letters getting sent to the on-campus organization saying, you can't do this. Bitcoin is for drug dealers.
Yeah.
Right? And right.
Yeah.
So, but then it was almost like a self-fulfilling prophecy. So it's like, they wanted to fight and say, we're not scammers. So then what did they do? They went and then did a bunch of ICO scams, which maybe temporarily, kind of stamp them to that, right? Or handcuff them to it. One thing you mentioned about, I think kind of learning lessons and evolving that I'm really curious about. So I think when I looked at 2017, 2018, okay, there's a ton of money raised, right? You can look at GitHub repositories, how much code is being pushed, how much adoption, how are they applying it to marketing, et cetera. I feel like in a certain level, that may or may not be, for a lot of the companies who had previously raised money, the best they ever had it, right? Yeah. And then as Ethereum starts dropping, right, in 2018, where it's they're holding all their money to $1,000, now it goes down to 100. So if they couldn't do it before at 10x, then they start freaking out, right, at a tenth of that money. And now I think, especially today, given the current climate, where whether you're in blockchain or traditional technology company, who they're kind of getting eaten alive, they can't complete bridge rounds, right? There's a decent fear. How do you kind of see that? Is there extra risk that a lot of the companies that are funded before might fold, or might even have more roadblocks? How do you think they're going to handle that? And what lessons would you give them?
Yeah, I mean, I would say this, right? Which is, if you look at this sort of blockchain wintry sentiment, one of the things that happened in the middle of it is the COVID-19 phenomenon, right? Which I think adds to the complexity of this risk-off asset. And so, when you see the compounding of these things, it obviously puts pressure on the balance sheet of smaller companies, sort of government aid notwithstanding. So I think that, we are going to see, one of the things described in 2017 was this kind of description of a Cambrian explosion of biodiversity around this whole token space, right? And then obviously what we're seeing now is we're seeing kind of more like an ice age, where you're seeing kind of contraction and extinction, right? But to me, that's all kind of normal. We're just on an accelerated boom bust cycle, because if you look at the companies that got built during the tech .com bust, which I was there for, you're talking about Amazon, Facebook, Google, Netflix, some of the kind of classic stalwarts actually from the previous generation, like Apple and Microsoft, which actually existed and were built way back in the sands of time. But if you look at the real super tech giants, the newer ones, those were built in the .com bust, right? So as you can see with this blockchain bust, the idea becomes like, if this is a truly sort of once in a lifetime, maybe twice in a lifetime generational transformation of technology, then the survivors of this time period are going to be sort of really epically well positioned to sweep up and do extraordinarily well.
Got it. So last question on this topic, and we're going to pivot, I love perspective on this, because I really do believe, obviously we invest a little bit, you invest more than us, but I do think there's continuously a disconnect in capital raise for these projects, where people continuously think of themselves as, I'm in blockchain, I'm going to raise money differently, or that stigma might be quickly disappearing, right, at a more rapidly moving pace. But I think when we look back to the mechanisms that were kind of used to raise funds, and then in the initial terms of blockchain, so whether it was ICO or the promises of STO, I can remember from our company, end of 2018, I'm kind of getting a lot of our founders together and saying, hey, I know a lot of people have lived in the ICO world, and you get tokens and you sell them, and the lifespan of holding that asset is dramatically decreased. Yeah. We need to start preparing for holding equity in these companies, right, for many years. And
agree.
How does that kind of change our financial outlook? So what's your perspective on, how were companies raising money? What does the future look like? Do you really think that there's going to be, at least in the short term, a lot of opportunities to raise money around tokenized models, or should these companies be getting ready to raise in more traditional, equity, convertible notes, et cetera?
Yeah, so I think traditional fundraising continues, and it's definitely something that people need to kind of pay a ton of attention to. One of the things that it benefits from is very robust professional diligence. So one of the things that was missing largely in the ICO world was this idea that someone who is kind of sitting home at their desk on the internet is sort of equal in stature to an experienced venture capital investor, right? So the idea that they could just read a white paper and then, just send ethers across the internet and make an investment, it's kind of tantamount to kind of filling a grocery bag full of money and then handing it to someone who you barely met, right? So that's not a particularly salient style of investment. So I think traditional venture capital angel investment will be alive and well. One of the things that's kind of emerged a little bit further in this kind of COVID crisis bubble is that the Jay Clayton, the chairman of the SEC, has been kind of relaxing some of the regulations around Reg CF crowdfunding as part of the USA Jobs Act, right? So crowdfunding, I think, will continue to have a slightly elevated profile, especially when it comes to smaller amounts, potentially spread over larger numbers of potential investors, right? But I think that what we're moving towards now is we're moving towards crowdfunding platforms, which do some of the professional vetting. So whether it be like Howard Marks, down in LA, or, whether it be folks like Republic, up in the San Francisco area, these crowdfunding platforms actually serve as diligencing gateway functions, and then they expose these deals to their communities as pre-vetted, pre-diligence deals. So it feels like the crowdfunding platforms are better than the ICO kind of approach, because the ICO is just really a web page, could be put up by anyone. And that feels very uncurated.
Side note, is Republic, this is a general question, is Republic officially a part of AngelList and Naval, or did they separate out?
It's a separate entity, but it absolutely has the Naval Ravikant investment seal of approval, and it's a separate entity. But they're getting into Reg CF crowdfunding, and it really is about kind of crowdfunded equity and kind of safe note holding, convertible note holding. So it really is, it's a lot like an angel list, right? Because it democratizes ownership of these assets.
Got it. Do you wish that there was not the limit of accredited investors? Do you think that's something that should be in place, or that the general public should be able to touch certain startup companies with documents and regulation?
Yeah, I mean, I really think that crowdfunding is innovative. One of the things that's really important to understand is the scale of it and the limitations of the scale of it. But I think it's a great first step. Jay Clayton has been really crystal clear about his need for improving capital formation and market access. As you can see, IPOs and especially tech IPOs have been like really, really down over the past years. And so it's really reached kind of a dysfunctional state with respect to kind of how the public markets access sort of the extreme growth opportunities represented by tech companies, right? So obviously there's extreme growth, there's extreme risk, and the question is, how do people get access to that growth? And to me, like, I think having these initiatives like crowdfunding, it certainly helps with early stage capital formation, and it exposes some of these investors to kind of some of these potentially high growth assets. But again, it's sort of limited. It's limited in the U.S. to fairly small amounts of fundraising, which is fine.
Got it. So, hey, I think we spent a decent amount of time, obviously, on kind of the investment landscape. And I think people, and for anyone listening, for the students listening, for the general blockchain companies listening, general public interested in blockchain, I think these points are important because from my perspective, we went through a fundraising cycle. There were a lot of promises. And what's important is that we don't repeat those mistakes. And the only way we're going to get there is by analyzing what happened. Right. And we can fight it and say venture capital or traditional investors aren't relative to this conversation. You could be an anarchist and say, oh, we don't want their money. I'm in blockchain. But I promise you at some point, and unless the world shifts even more, which I wouldn't be surprised at what I've seen in the last few months, we should at least understand these perspectives. So I kind of want to shift the conversation. I've always been interested in, I was born and raised in Las Vegas till I was 24 years old before I moved to San Francisco. I started my first company when I was 19 in home automation. And I kind of watched the real estate market crash, right, in 2008, and kind of Las Vegas was especially hard hit. So I was watching this happen in real time. I think I was 20 years old or 21 years old or something. And it always stuck with me, like how big of a moment that was in time, right? And when I reflect back on Bitcoin or the creation of Bitcoin, when you go to the Genesis block, you find one of the first code commits, right? Is a very specific reference, right? It's like January 3rd, 2009, the chancellor's on the brink of second bailouts for banks, right?
That's right.
So we could ask, why was that relevant, right? Why would you pick that comment, that code comment? Why would you reference that, right? So now I fast forward to 2 months ago, right, where the Dow is in free fall. The Fed is now cutting stimulus checks again. You could come back to 2008 where, there's all this money being distributed. And now we're saying, okay, Shake Shack got $10 million and they're returning it, right? So what we don't know is probably the devil's in the details. But what do you think, and I'm really curious to your perspective, kind of the perfect storm that exists right now, right? Whether that is just global healthcare, whether it's people being isolated and kind of the impacts of that, maybe job loss, distrust of governments. Do you think that this is a moment that blockchain can kind of get its second win? And what are the characteristics there that you think are important?
Yeah, so I would say that there's 2 layers, right? I would say there's the deepest possible layer, and then there's kind of superficial layer. So I'd say at the deepest possible layer, one of the things that's interesting to understand is the timing of this innovation and this foundation, right? So if you actually look at this notion of what Satoshi Nakamoto encoded into the Genesis block of Bitcoin, it really is almost like a battle cry for an open source government service, right? And so when you think about global public utilities being decentralized, one of the really unusual ones is the printing of money. And this is really crossing a Rubicon. So this is really kind of a historic event. And the thing that I think is a bit shocking about it is that in order to really understand the impact of that event, you really need a time course of maybe 100 years rather than a time course of like 100 days. Right. So for me, when you think about 100 days, you're really talking about kind of the course of the COVID pandemic, and really how it's impacted kind of all of our society. So on the more superficial level, the thing that we're seeing is kind of very fast government money printing And you're seeing, so for me, one of the things that happens is that a rising tide lifts all the boats. And so what I think that this wave of consolidation around the Bitcoin halving will do is it will erase kind of longer term doubts about the fundamental the people are bipolar with respect to Bitcoin, because at one time they're saying Bitcoin is here to stay, and then they're saying blockchain is here to stay, and then the next moment they're saying, oh, Bitcoin's dead, right? And those tend to coincide with Bitcoin all-time highs and Bitcoin all-time lows. Bitcoin never actually reaches all-time lows anymore, right? Because if you look at the all-time lows, it was close to zero, right? And my point is that Bitcoin keeps doing what it does because more and more people continue to discover this property of hodling, right? So what you're really seeing is you're seeing long-term accumulation, and you see volatility as a superficial phenomenon on top of that. So the reason why I focus so much on Bitcoin is that Bitcoin is really the kind of grandfather of everything. And in a way, it's sort of solidly proven. But once you have kind of really solid proof and traction, that what you have now is essentially an insurance policy against government money printing, right? So if you think about that, it actually is, people say, oh, it has no sort of intrinsic value, but in fact, it has crazy intrinsic value, right? If you look at, people talk about gold and they say 5% of gold can be used to print circuit boards and in other industrial tasks, right? So that's considered to have, therefore, intrinsic value, right? But what if there was a need for an open source public service that provided a counterweight to government money printing? Now, historically, that's been gold. But the thing that's really interesting about gold is that it has certain properties that Bitcoin doesn't have. And I think Bitcoin has transportability, which I think is a really interesting property.
Gold weighs a lot.
Yeah, it weighs a lot. It's super hard to transport, right? And obviously there's complexities associated with, holding and hoarding gold, right? But the point that I'm trying to make is that if you think about the COVID phenomenon, in a way, it is kind of a blip in this kind of 100-year history of the emergence of new online financial infrastructure. And in fact, the reinvention of systems that are just beginning to address the issues that we're facing. So to me, when I see society in its present form, what I see is a tremendous collapse of institutions. So institutions like science and institutions like mechanisms for verification, things like journalism and the press, like all of these systems are under tremendous attack and under pressure. And what's happening is that a lot of institutions are kind of failing, and they're failing to provide the services that they used to provide, right? So what's happening now is that we're really seeing kind of a breakdown of all of these systems. The thing that's problematic is when you think about the 100-day time course, blockchain is not going to present solutions in that kind of time frame. So it's not like all of a sudden a bunch of startups are going to say, oh, we have a blockchain-based identity solution, and all the governments of the world are going to adopt it in the next 90 days because they want to do COVID testing on the blockchain. That's probably not going to happen, right? The thing that will happen is that what we're talking about is an open source internet protocol and foundation for new institutions that are going to take time. And if you actually look at open source software, the largest software acquisition in history was the acquisition of Red Hat software by IBM. And obviously you saw the acquisition of GitHub by Microsoft, and and on and on. There's the acquisition of MuleSoft by Salesforce.com, right? So you're seeing like many, many tens and hundreds of billions of dollars worth of open source companies being acquired. But what came before that? What came before that, I can tell you, is like a 30-year history of people dismissing open source software, of people kind of talking about, okay, well, now it's a fringe, and then people saying, well, open source software is dead, so it went through the same kind of cycle. But what I can tell you is open source software may be inevitable, but it also takes time, right? Because in a way, open source software is something that just continues to compound, but it continues to compound incrementally, right? So it's really like 1%, 1%, 1%. All of a sudden, when you look around 10 years later, it's a transformation, And if you look at where Bitcoin is as compared to 10 years ago, it's a lot different. And if you look at it 10 years down the road from here, I'm very confident to say that it'll look a lot different from how it looks today, and in a positive way.
I would be surprised if it didn't. Obviously, a lot of things you said there. A few comments, and then want to ask one more thing, kind of around maybe what you think about the current psyche of people and how that might open some doors. Then I would like to talk maybe a bit about some applications. But 2 points I wanted to hit on. I think it's very interesting when you mentioned IBM and open source, where I think IBM had a kind of venture in the world before. If you go back 20, 30 years, they had really championed open source, only to see that they didn't really have a business model around it, or didn't monetize it, and they kind of were left holding the bag to a certain extent, right? They weren't able to recoup their investments, so they saw other players kind of step into the space. So I'm always interested as I see them approach Hyperledger, right? I think it's very clear to me now in conversations I have with them or seeing other partners where it's like they're very clear that they're not, they might have pushed this out to the public, but they're very clear that there will be a business model behind it, right? And not to be an economist, as you mentioned, gold. This is one place I don't really touch, but I've always had one example of laughing at gold and saying, when you see companies like Planetary Resources, et cetera, where their goal is to go and find asteroids, tow them back, put them in the orbit of the moon, and kind of harvest gold from them. What if you start bringing 1,000x more gold into supply? Then the mathematics actually don't start to add up very quickly, right? We might need to throw out some of the old textbooks. And I think it's an interesting place of where we are now with COVID, right? Where, universal basic income, or people kind of being subsidized from governments, was experiments going across the board, whether it was YC doing it in the East Bay, right, or European governments trying it, and now we don't know where we're going to net out here with job loss, or right, and we're kind of hoping for the best, but it seems like there's a possibility that we might not end up on the side of success, right, going out 6 months to a year. So the last question I want to kind of ask in regards to current situations. What do you think? Do you think there's a door open right now that in the same way that in 2008, when everything was in chaos, it was a moment where people could be open-minded enough to think about something called Bitcoin? Do you think we're kind of experiencing that same? Is there a momentary door being opened right now that we need to seize?
Yeah, absolutely. I mean, here's the amazingness, right? Which is, I would say this, right? Which is, to be perfectly kind of frank, like, Bitcoin is a janky asset, right? It cries a lot, right? So it's really not, when people look at it, like people like the IMF, like Lagarde is looking at things like blockchain-based assets. Obviously, her interest is more in things like stable coins. You're seeing folks like Xi Jinping in China, who's kind of embraced blockchain, especially for their digital payment infrastructure tied to the Belt and Road Initiative in China. So definitely there's some serious investment kind of moving into this space. And the thing that I think is amazing about it is that, these things take time. And the fact that they are slow and yet exponential is really something that people are very bad at reasoning about. And so the thing to me that's really foundational, if you're, for example, a university student, is that this is really the birth of the next internet, right? And so to me, like, you're here and you can basically get in on the ground floor of this thing, which I think is just, it's amazing. And the fact that it's unfolding gradually is hugely to your advantage, right? Because the thing that's so amazing is how poor people have been proven to be about reasoning about exponential phenomena. For example, the COVID phenomena, people are, policymakers are extremely poor, and as is the general public, at reasoning about this exponential phenomena. For example, global warming is another one which causes consternation among the general populace as well as policymakers, because humans just don't do exponential phenomenon very well. And so
they think linearly, like until it slaps them in the face.
There's very little evolutionary precedent for exponential phenomena where the individual species members could do anything other than just die, right? In other words, like if you're faced with an exponential phenomenon, the amount of stuff you can actually do about it is pretty limited. Like it either hits you and you die, or like, you know, and in a way, the idea that we've reached a stage of global sophistication, communication, science, where we could actually arrest emergent phenomenon at a very, like, you know, that pose a threat, like global warming, or, you know, things like COVID. That's amazing. But, you know, the flip side of that equation is that we can actually join or benefit from emergent exponential phenomena that are in its infancy. Like, it's phenomenal. It's amazing. It's extremely powerful. And, you know, to me, when you look at blockchain technology, like, this is one where if you look at open source software, you know, it isn't even just a metaphor, right? Because, you know, all of the meaningful blockchain projects are essentially made up almost entirely of open source software. And so, you know, the thing that I think is important to understand is that, you know, Bitcoin and therefore blockchain are part of the evolution of open source software. And in fact, you know, Bitcoin is actually, I would characterize it as the first open source ops team, which is, since people are actually incentivized to download and run the Bitcoin nodes in the form of Bitcoin mining, it's really the first time ever that you know, a bunch of volunteers have volunteered to run infrastructure that, you know, where the project itself is somehow able to mint a compensation for them doing so, right? Because otherwise, you know, let's say I had an email protocol and I was like, you know what I really need are an infinite number of email servers. I would just like all of you in my community to download the server and spend your money on AWS to send messages on behalf of the users. 0 people would do it, right? Because it's like, why would I spend my money running a server for these community members who aren't paying me, right? Whereas in the case of Bitcoin, if you run a node, Bitcoin itself pays you, right? It mints new Bitcoins and it hands them to people who are running the software. So to make a long story short, like, you know, the evolution of Bitcoin is inseparable from the evolution of open source. And as a function of that evolution and the evolution of internet protocols, I believe that this new foundation is going to be kind of the next wave of internet infrastructure that actually kind of elevates society into a much more highly performant state. But what I can tell you is, unfortunately, that it's going to take time, and we have big problems right now. And I don't think that the solutions that blockchain has to offer are actually going to fix the current immediate problems that we have, of which there are many. But what I can say is that over the course of decades, Bitcoin and blockchain absolutely will have a very bright future, as they're part of an inevitable open source, internet protocol infrastructure.
Do you think that they're completely inevitable, or do you think there's like some chance we could completely fuck it up?
Well, I mean, the bottom line is that nothing is inevitable, and the history of all of these things hasn't been written, you know. So obviously, like,
So do we
an asteroid could hit the
collectively
Earth, or
have a responsibility to be good stewards to kind of guide it to where it needs to go?
well, I mean, the thing that's amazing about open source is that the inevitability of open source is that it does itself, right? Which is that it's a matrix that effectively competes for human consent, but that as a function of energy input coming into that biosphere, you know, we have this continuation, right? And the thing that's really amazing is that, you know, the energy that comes in is really the energy of consent and of human benefit, right? So the thing that's amazing is, if you look inside of GitHub, you're going to see what I personally claim to be trillions of dollars of licensable software that are being given away for free. Now, people could argue that it actually isn't trillions of dollars worth by definition, because people are paying $0 to use it, right? So because they're paying $0, you could argue that open source software is of no value, right? You could argue that. But if you actually look at the largest, most valuable tech companies in the world, probably 90% of the lines of code that they're using are open source software, with only about 10% of the lines of code written on top being proprietary. So, you know, to me, we wouldn't have any of the technology companies or benefits that we currently are engaged in without the existence of open source, right? The problem is that we have a very poor system of measurement called GDP that actually looks at open source software as a form of terrorism, in the sense that open source software is decreasing the GDP rather than increasing the GDP, which is extremely aberrant. Our economic systems of measurement are actually a little bit broken in a lot of ways.
I always look at that like price earnings ratio. I'm like, man, if you just measure every time you want to make more money, like eventually if you corner every market, you have no more customers to sell to. What are your only ways to squeeze out more profit, right? You have to cut costs, and you have to start cutting costs in ways that don't necessarily make sense, right? If you're supplying food, well, you start to drop the quality of your food, right? And long tail people, might not agree to this. So a few things I want to hit on before we pivot real quick. So I'll say, you were talking about kind of the open source community and I think GitHub a few times. I've always laughed just when I really see like GitHub repositories, kind of the flow of people committing to GitHub, like master repos, especially in open source, right? It's interesting, I think, how much blockchains kind of mimic that, right? Like where it's a flow of code that people are kind of committing or not, and you kind of have one source of truth, one source of code. One thing you said earlier about like students and kind of how they should think about it, and I would like to pivot here to kind of maybe talk a bit about applications. And again, we don't know yet, but I'd say between 3,000 to 5,000 students kind of listening to this conversation, really trying to kind of help them think about their career paths, right? So the 19, 20, 21, 22-year-olds, as they're kind of deciding which route they want to go in life, or they want to get a job at Apple, or they want to work for a blockchain company. One of the things that has always inspired me since we started really applying pressure towards the university side is like, sometimes I'll sit in rooms with like, blockchain or crypto, like the veterans, right? And there's a lot of pessimism, it's like they've been burned on an ICO, or they heard this project was going to be the best thing ever. So they're just kind of tuned out now. They've heard enough. Well, then I'll get on a call with like 30 or 40, 19, 20, 21-year-old CS majors, data science majors who are in the blockchain club at XYZ University. And then I get on a call with them. There's no pessimism. They're like, they didn't get burned on an ICO. They're like, I'm going to build an application and I want to do it on blockchain. Right. And I always laugh because I'm like, then I'll go to the next meeting with like a bunch of 35-year-olds and I'm like, there's a mismatch here. Right. Like, I really do see the generation coming up behind. I honestly believe that they're just going to say, we don't understand why we shouldn't use blockchain, right? Like, they don't have any preconceived stigmas. They don't have any past experiences. Their dads didn't like lose $1 million in like an ICO scam. So, to kind of guide them a little bit, or to get your perspective, I want to understand how you think about applications, right? So I've heard you many times in this conversation really highlight, financial applications, which I think you and I are on the same page. I think as everybody's searching for an application, it's like, shut up. We already have one. Like, look at it. Like, Bitcoin you've never seen, like, we know we have an application. The question is, do we have more applications, right? And are we sometimes are people just trying to fit, solutions to problems that don't exist, et cetera? So how do you, obviously, or I'll assume so you can answer, but like, are you like 90% interested in like financial applications for blockchain, and you're kind of waiting and seeing?
Let me give you so when you talk about interest, like, I have wide ranging interests and I'm very kind of curious as a human being. I think when I put on my investor hat, I'm really a class of what's called the professional investor. And by the way, the word professional as a modifier of the word investor always means other people's money, right? Because if you're a professional investor, it means that you're getting money in order to invest money. And the only way you can get money by investing money is by taking fees from other people who are giving you the money to invest, right? So, so if you're investing your own money, you're not going to be taking fees from yourself. Like, the math doesn't work. So the point that I'm making is that I'm conservative about what I'm interested in on behalf of the crypto investment fund that I'm participating in, Gumi Cryptos Capital, right? But let me put it to you this way in terms of the history of the internet, right? Which is, if you look at what happened, right? What happened is that in 2008, Lehman Brothers collapsed, destroying essentially $600 billion of its own balance sheet, but obviously creating a domino effect. For example, if you look at AIG, the insurance company actually had so much insurance on Lehman that that collapse actually would have taken out AIG, right? And then obviously the domino effect went to all other financial institutions. At one point, the United States government had to step in with effectively, quantitative easing in order to prevent the collapse of the financial industry, right? So this is going all the way back to, ironically, September of 2008. And I say ironically because the Bitcoin white paper was published in October of 2008, about a month and a half after the collapse of Lehman Brothers, right? So it's as you mentioned in the Genesis blog, Satoshi Nakamoto put really interesting cryptic code about how the collapse of banking leads towards governments creating money printing schemes. And obviously this is all related strongly to the history of the emergence of this asset class. But to me, what I said earlier in the conversation was about the storage, transport, and transformation of value through programmatic constructs like contracts, And so if you think about that, you can think about value. The most primitive initial forms of value are going to be like the Yapstone, coins that were the first proof of work money that we know of, right? So the point I'm trying to make is that the most primitive applications are going to be financial services. The thing that happened over the course of since 2008 is that the largest, most valuable companies in the world became tech companies. And what happened is people started saying data is the new oil. But the thing that's so ironic is that the oil industry has collapsed, right? So I think data is not the new oil. Data is the new money, right? So the thing that happened is that you had banks that were too big to fail in 2008. And now you have data banks that are too big to fail. Like, for example, Facebook, or you have Google, and you have these huge data piles that effectively aggregate user and consumer data and, effectively breach user privacy, and have a bunch of other really negative externalities. Actually, Jaron Lanier, who is the creator of virtual reality, actually said Silicon Valley won, and then we became the assholes, right? So banking, the East Coast used to be assholes, and now the West Coast, tech, are now assholes, right? And so why am I going through this kind of long exercise in describing this history? The reason why I'm doing that is we have to understand the emergence of what it means to have an internet of value. And the question becomes, what do people value? And I can tell you that initially what people will value are tokenized representations of value, either backed by an asset, like a stable coin, or ones that are essentially infrastructure coins, like a Bitcoin, right? People will value those, right? And the transfer of those will be valued. But the point I'm making is do people value their identity? They do. Do people get mad when their identity is stolen? They do. And if someone starts using your credit card, the identity is actually now tied directly to your money. And so now someone's stealing your money. So now they're really mad. Right. So the point I'm making is that are there applications other than financial services that represent the storage, the transformation, the all really related to value, right? So data, we know data has value, right? So things like data privacy applications, things like identity applications, like obviously those are also things that can be transferred, transformed, and stored on a blockchain. But my point is that those probably won't be the first things to happen. And if you look at the evolution of the history of banking and of data banking, it may be a 10-year lag, right? It may be that in 2008, banking collapses, and it may be like 20 years later, where 10 years later, where data banking becomes a huge thing. And then it may be 10 years after that when data banking suddenly becomes collapsed, right? So for example, right now, Facebook, everyone hates Facebook. And thinks of them as an evil, invasive conspiracy theory, Russian troll populated sort of house infested house of evil. So everyone's kind of mad at Facebook now for stealing people's privacy and selling it to advertisers. So to make a long story short, I think that yes, I'm interested in a whole host of applications, but I do think if you want to reason properly about the blockchain, you best not compete with existing infrastructure for transferring, storing, and transmuting information. You should really focus on transferring, transmuting, and storing value. And whether the value is in the form of data, identity, or actual tokenized representations of money, to me, the money applications come first.
Well, you just made a very interesting point. It's something I've talked about for a long time. So I think I was originally drawn to the space in like mid 2017. We were kind of working through me and my partner, like one of our last companies. We've always been, I'm like half technical, half business. So like, I'm always good at rallying like engineers and hackers. So we had like a strong team of engineers that wanted to follow us. Right. And I was like, okay, people are calling me like, Patrick, there's a lack of blockchain engineers. Right. So I'm like, okay, this is interesting. I want to look at it and really trying to think critically about, and I'm asking my friends, as you bring up Facebook, like, I've known people like my good friend Antonio wrote Chaos Monkey, right? Like my friend Ben Reisman was like built Facebook ads, right? Like, and I'm watching it and I'm asking kind of my tech friends their thoughts on blockchain, right? And I'm kind of seeing this general pessimism, right? And it starts to occur to me that it's not, late 2017, early 2018, if you only cared about money as a developer, well, there was plenty of money on the table. Like they needed help so bad come early 2018 that the amount of checks flying to kind of hire talent, if you only cared about money, it was on the table, right? But I think if you looked at a developer, and I think a message for students maybe graduating or kind of thinking of their career path, when I put on like a chart, a developer getting into school, what is good, right? So that, okay, I'm a data scientist or, CS major, whatever, and I want to get a job at Apple, Google, Facebook, whatever. What is good? So good is maybe I'm going to make this application milliseconds faster. Maybe I find ways to, exploit customer data to make the company more money, et cetera, right? And then you kind of line that up against blockchain. And then each line I found from a developer standpoint, it didn't really line up. Like inherently, blockchain would be slower, right? Inherently, blockchain would be more difficult to exploit customer data. So say, okay, what would the final value proposition be to inspire this community to really give a shit, right? And the only thing I could ever come to is saying, if they could think outside of themselves, if they could think 20 years down the line and say, okay, I have a kid now, do I want my child's data, right? And I couldn't find like another metric where I'm like, almost the only thing that matters is pride, right? And thinking about how you want your kids to live, right? So I've always been intrigued by that. Like, how do we attract blockchain developers? What really gets people on the boat, right? Not to sway them away from their cushy corporate jobs and some tech company, right? Like that's very hard to compete with, right? What are those elemental points that actually stand out that transcend, our current motivations?
Well, I think it doesn't have to transcend, because one of the things that's beautiful about evolution is evolutionary by definition, but evolution is also revolutionary, right? So in other words, like, if you wake up in the morning, you might hear some birds chirping, right? Like those are literally the descendants of dinosaurs, of ornithischian dinosaurs, and they just fly around in the air like there's no problem, right? So how did all of that happen? That's insane, right? It's ridiculous that exploded star parts achieved consciousness and are now sitting on a Zoom call having this conversation, so like, evolution is revolutionary, right? So to me, the thing that's novel about blockchain is that people can own protocol, the value of protocols. Like, can you imagine someone's like, oh, I've got this thing called TCP/IP, which is the internet protocol, atop which the entire internet does everything. And what if someone said, I'd like to own 5% of the internet protocol, right? And everything that rides on top of it, I'm gonna like make money, right? So the thing that's novel about this is this is literally true for something like Ethereum, right? So the point that I'm making is that we don't necessarily need to assume or assert that all open source software development has to be driven by pure altruism, and it has to be done on the evenings and the weekends while people slave away at their corporate job at Amazon, right? Like, that's not what we're asserting here. What we're asserting is that young people have the potential, you know, like if you look at Vitalik Buterin, he's a young person, you know, like he's Vitalik Buterin. He may look old to some people and, you know, are still in college, but like, he's still a young person, I would characterize. And like, relative to me, I'm an old person, right? So the point that I'm making is that, you know, these new emerging protocols have a paradigm of ownership. And, you know, the thing that's so amazing about it is that, you know, if you're able to properly design the mechanisms of value capture, then you can actually have a voluntary and participatory consent-driven ecosystem that, you know, enriches the people that have proportionally contributed the most used components, right? And the thing that's funny about that is that that flips on its head the paradigm of open source software, which is that the most used software in open source is the quickest to go to zero in terms of price, right? And that's actually the reverse in the blockchain world, which is that, you know, the most used piece of infrastructure actually gets the highest value economically. So, you know, like I said, this is an evolution of open source. And to me, when I say it's evolution, it's a little bit like the first lizard that maybe was running away and maybe flapping his arms a little bit and started flying, right? Like it's a small step from the creature that could jump farther because they could flap their nascent little reptilian pseudo wings, right? So now we have these flying organisms called blockchains that have, you know, some of which have, you know, an ownership paradigm based on tokens, and others which don't. But like, you know, to me, like the emergence of this capability in the open source biosphere, which is the ability to pay your developers using a token that represents the value of the project, insane, unprecedented, and something that will clearly be revolutionary, you know. And I think that there's tons of stuff that needs to be figured out, right? So for example, there are extremely early Bitcoin developers.
This stuff is not easy to build. I learned it, like the decentralized future, and for everyone listening,
Yes.
like you don't rush it. Like
Yes.
there's a reason why this is taking time. Like it's not simple to keep many disparate devices in sync with a non-unified set of data that we trust everyone. Like
well,
this
let me
is
put it this
not
way.
easy.
Let me put it this way. People are complaining to Vitalik Buterin and to the Ethereum core devs about the speed of upgrades of the Ethereum network, right? And the thing that's really funny to me that makes me laugh is, you know, first of all, you have to understand how many billions of dollars of value are being protected by the software code base of Ethereum. So what you have to imagine is you have to imagine that these, you know, many tens of billions of dollars effectively represent the software for a bank. And the bank of Ethereum contains this value and is securing this value using cryptography and cybersecurity, right? So, you know, how often does an IT department in a bank like upgrade their infrastructure software? It's pretty slow. And the reason why they do it slowly is because every time you put in new features, you create new vulnerabilities where hackers can basically scoop money out of your bank. And
they're all using Java applets still.
Yeah, so my point, exactly. Bank software is super slow to upgrade, and it's because they're protective of the asset. That's the key, right? And so the people who are really complaining about like, wow, Ethereum upgrades are so slow, it's like, why don't you run a bank with tens of billions of dollars in it, and why don't you upgrade the software for that bank using the most bleeding edge algorithms that have ever, you know, been seen, right? If you look at kind of the ETH 2.0 stuff they're working on, that's all super bleeding edge stuff. And they haven't really dropped people's money yet, which is like amazing. Like dropped it into a black hole. Like they haven't ruined everything yet, which is that's pretty nice. I mean, you could obviously argue that immutability was attacked during the creation of Ethereum Classic during the DAO hack. So you could say that there's one incident where they had this weird immutability reversal, but I would give them that as a pretty, I'll give them a pass for that one.
Not everyone is doing so bad. Like there definitely is innovation. And I do think like, I kind of live half in the tech world, half the other side, and I see it. I'm like, man, get out of here. Like, you have no idea how hard this is to build it. And kind of what you're saying. Yeah. And like, I've always looked at, I was like a Microsoft fanboy for a long time to like switch to Apple and just can never get away from MacBooks now. But like, I always laugh at Windows, right? And like Bill Gates, and I'm like, people just shit on Windows. And I'm like, you know what? Why don't you, I would love for anyone else to try, like go make software for the entire world's computers, right? Like go make an input output protocol that can plug it in any printer, mouse, software.
It's unbelievable.
And then you tell me later, like how much of a better job you would have done, right? Like it's really easy to kind of criticize from the bench, right? When you're not like in the game. Like,
it is. And the thing you have to picture is this. The thing you have to picture is you're sitting at home, you got your IDE open, you're kind of writing code and you just patch it. And you have this kind of build, deploy, run cycle inside you're inside your IDE, and you're running it and you're like, oh, I found a bug. And then it's like, okay, I'm going to run it again. Okay, fix the bug. Okay, everything's good, right? Like, okay, that took you 10 minutes. Like life is great for you, right? But if you push something like that bug into production on a Microsoft, like 300,000 printers around the world go dark, or, yes, like incrementalism is real and it's there for a reason. So I totally, and that's just printers, right? If you go to Ethereum, it's like, $10 billion could disappear if you screw things up. So it's a different level of paranoia and a different level of caution. That goes with Ethereum improvement proposals and how to implement those EIPs. So I think it's a great the community is evolving governance mechanisms. It's evolving kind of source code control mechanisms that enable us to handle these kind of extraordinary new conditions. But so far it's been amazing. It's been absolutely fantastic, and we are talking about the evolution of not just open source, but the evolution of money and the evolution of, internet money, a creation of an internet money, which is like completely open source. And it's governed by code.
Well, I always, sorry, I didn't mean it, but I always laugh at people like talk shit about Bitcoin. I'm like, okay, show me any other platform that's processed that many transactions with throughput, right? Like pretty much hasn't been hacked, right? It's really easy to sit on the sidelines and say, judge Bitcoin. Oh, Bitcoin is old. It was never designed for this. And I'm like, all right. But hey, I know we're running a little bit over and I want to respect your time.
Yeah, no problem.
I have one more question I want to ask here on the application side, and then would like to kind of get some of your thoughts for any of the students listening. I think kind of really the whole ethos of this is to kind of give them some messages as they kind of think about, how they want to approach blockchain. But, one element that we're really trying to hit here is around adoption. And from my side, it's something that really intrigues me. And I think let's separate out fintech for a second, right? I think you and I are on the same page. We know we're kind of on the path there, right? Whether it's, I was on a call with Ripple earlier. They just told me that they think they're doing 15%. They just did 15% in the last quarter of all remittances to Mexico and the US, right? So it's like, I know, like we can see this is happening. Like Bitcoin works. I ask people, I'm like, would you be comfortable sending $1 billion of Bitcoin right now? They're like, yeah. I'm like, okay, cool. Like we know we're on to something now, right? But if we drop fintech, if we just go to general blockchain, what interests you there? And I'll add kind of a caveat to that. I think, at least from my perspective, and I'd like to hear your thoughts. I really do believe that enterprise corporations who can kind of provide validation of this technology at scale are a key partner to these blockchain protocols or companies to really, there's no other way for these blockchain companies to learn and grow and evolve without their stuff being ran at scale, right? So they kind of need these partners that can run it to kind of bring back to them the data, right? Or give them the real world experience. What excites you in like the non-fintech blockchain space, and what do you see as the roadblocks to adoption between multiple entities?
Yeah, so to me, one of the things that's really essential that I think makes enterprise blockchain complex is that, one of the things that's so important about this principle of decentralization is really that it solves problems of trust, right? And what it solves is it solves actually a mistrust of the provider, right? So the issue becomes this, right? Which is, why would you have custody of your own Bitcoins? The reason you would do that is you didn't trust the banking system, right? And the question becomes, how much do you trust the banking system? Obviously, you may have a lot of money in the banking system, but as a hedge, you may have a small amount of money outside of the banking system in private custody, of Bitcoin in something like an Evercoin wallet or some kind of wallet, right? But my point is that when you talk about enterprise, the issue is that the entire function of the enterprise is to centralize trust, right? So every enterprise has a brand, and that brand represents trust in the enterprise. So the point is that there aren't that many use cases where blockchains can deal with kind of the lack of trust and a centrality, because, I think there's some around things like supply chain consortia where there's like no individual company trusts the other company, but they may trust kind of an independent consortium. The other place where we're seeing some action is that identity management. Gumi Crypto's Capital, my fund, is actually invested in a company called Keyless, and Keyless actually manages a really interesting thing, which is biometric authentication with the privacy preserving multi-party computation fabric, right? And the reason why this is important is because it has to do with more like regulation. And the regulation it has to do with is this three-party problem of trust, where there are governments, and then there's corporations, and then there's individuals. And the individuals have to have data and identity self-sovereignty. The governments have to have an assurance that their privacy is being honored, but they don't want to have a privacy preserving mechanism that's subject to corporate tampering, right? So, once you have a regulatory apparatus that's subject to corporate tampering, then you have like Volkswagen kind of faking their emissions numbers on their cars, in order to kind of pass these environmental regulations, So as soon as the companies can kind of hack the own regulatory mechanisms, then it just becomes a game and it becomes kind of full of fraud, right? So the point that we're making around something like Keyless is an enterprise application that uses biometrics to effectively first enable securing of a remote workforce, which is something that's extremely valuable during a time of shelter in place and COVID. But in the long term, what happens to Keyless is it becomes an end user authentication that is privacy preserving. And the reason why is that the user's biometrics are stored in a multi-party compute framework that's decentralized in a blockchain, right? So the point is that nobody actually stores the nucleus of the identity. Nobody actually stores the nucleus of the fingerprint of the user's facial identification. No individual company actually stores any of that information. It's all stored in a fully decentralized mode. So to us, for example, that's an application where you have this unusual three-party confluence of individuals who have sort of data sovereignty, and then you have governments that have regulation, and then you have corporations that actually are the implementers of these. And in order for the corporations to become compliant with regulations like GDPR, privacy preserving regulations in Europe, they need mechanisms to store private information in a way that doesn't implicate them, that effectively makes them
they need to obfuscate it. They need to anonymize it.
They're computationally and provably never had that information, right? So because of that, the corporation is even protected against bad actors inside the corporation, right? So they're protected against even rogues within their marketing organization or rogues that are working in a marketing agency that want the private data that the enterprise owns. You know, the enterprise doesn't even have the private data because it's held in a multi-party compute framework that's fully decentralized, right? So the point that I'm trying to make is that this is a very exotic set of conditions, and it has to do with this very complex three-party problem between corporations, individuals, and governments. But I would say that, you know, you have to find cases like that where you can build applications, where you have kind of really strong commercial drivers, because obviously these companies are forced into configurations where they have to support remote workers, they have to secure and authenticate remote workers, and they also have to comply with government privacy regulations. So, you know, that's a very small and narrow corner case. Unfortunately, you know, we have a portfolio company that's kind of attacking that very specific product niche. But, you know, I would say that the number of such niches is fairly small. And, you know, we do see, you know, a lot of people continuing to try across enterprise use cases. But I do feel like you have to be kind of careful when you reason about the economic incentives of the parties. Because, you know, when you think about economic incentives in the enterprise, the most convenient thing in the history of enterprise has always been to centralize. And to some extent, if there are regulations, the incentives tend to be to kind of try to cheat the regulations, you know, whether that's legal or morally acceptable. You know, it's not, none of those things are necessarily of consideration, you know, unfortunately, because there's sort of an economic incentive to do those things.
So to kind of hit on what you said in you know, maybe 2 hours before this, our interview, which I've been lucky enough to have, I was on with Paul Brody from Ernst & Young, and he kind of blew my mind a little bit about something like, you know, we do a little bit on the corporate innovation side. So I've been having a lot of these conversations, and I think from our perspective, we don't have a blockchain protocol or anything, right? We have an engineering team, so we can stay a little neutral in how we approach these conversations with certain companies, right? And on the other flip side, from our education initiatives, we have like a blockchain education alliance, which is Binance, Stellar, Ripple, NEM, Neo, Tron, every blockchain pretty much. So I on one side, I kind of have candid conversations with a lot of these protocols. On the other side, I think I have conversations with enough corporate partners. What's really shocked me in conversations I've been having in the last 2 months, that to me is a bit worrying. And then again, Paul Brody, shout out from Ernst & Young. I don't leave many calls with like just a moment of shock, but I kind of left this one today, which is that, you know, I think if you go back to 2018, you go back to 2019, you have all these platforms raising a ton of money, right? And they're like, they know some, like, maybe the SEC is going to start suing them, right? Like, they're like, okay, we need to like prove what we're doing, right? Like if anyone comes knocking, we at least need to say, hey, we're working with X company or Y company. Look, like this isn't a scam. We're actually innovating. We're actually deploying technology. So I think a lot of blockchain protocols in search of validation or in search of just trying to test their technologies, they went down this path in 2018 and 2019 with a lot of corporations, very bushy-eyed, and said, okay, you guys have a supply chain that can scale to X, and if you give me this pilot, then I will be able to come to the public and say, look, my blockchain performed in this way, right? So a lot of the blockchain protocols and companies kind of went down this path, right? And then on the other side of the you know, institutional corporations, they were gung-ho. I might put a little bit on it to say that like maybe the corporations just use it as PR articles to kind of, you know, stay relevant in the blockchain conversation. And then when you look at the corporations, it's like, okay, when the pilot started, why, right? So maybe there was like one internal evangelist, right? Who was like, I'm the blockchain guy at the company or our innovation arm. Like, and he knew it. He was like, I'm the guy that goes to the rest of the team and is like, all right, we're going to do blockchain. So maybe that guy left during a pilot, right? Yep. Okay, now the pilot stopped. Or maybe there was a consortium where one industry player showed up late, right? And then they felt like their interests weren't prioritized in the way that the more the previous members had kind of structured it, right? So, and I could give 3 or 4 more examples where I see when I talk to corporations, I'm like, they're like, okay, we've tried 6 pilots in a year and a half. 5 never went live, right? Or half never went live.
Yep.
So I think on one side, you see the corporations that are kind of like, they're pivoting a little bit, like, we don't just do pilots anymore. We really want purpose for what we're doing. Just like, I kind of view it as a buzzword, right? And then I think the axe is getting cut on them right now, and a lot of innovation arms just because of economic situations where they're kind of like cutting out the fluff, and they might consider blockchain fluff, right? And during this time. And then I talk to the protocols, and the protocols are like, nope, I did that. I went down that path. I tried to do a pilot with them. We tried to do enough pilots that were just like, we're batting like 15% average. Like, they're no longer interested, right? So I'm seeing a mismatch where it's like the protocols are
there's a big mismatch.
Disillusion, right?
Yep.
So then I see like now everyone's defaulting to Hyperledger, right? And I'm like, I'm kind of looking at it, I'm like, wait, is Hyperledger like the whole, Satoshi Nakamoto, is he like, hey, for enterprise, we will use Hyperledger, right? So, it's something we've been thinking about a lot, and it's something that for me, it kind of hits close to home, and I've been telling corporate partners or corporate conversations, which is like, look, you need to understand that if you want to attract good talent, what you can do is if you say supply chain, right? Let's say you're the number 1 beer distributor in the world. If you say, okay, your supply chain, I want to do 5 supply chain pilots. Well, company A comes in, B, C, D, E. And then company A through E is going to do the same conversations. They got to get on 10 phone calls with each stakeholder. They have to be worried about 1 internal evangelist. They have to go check each internal software. They have to write custom integrations over and over and over again, right? Where I think to a certain extent, if the corporations made a decision and said, we're going to pursue blockchain, and therefore, if we know we're going to do things over and over, right? Like, we either have to decide, are we going to do blockchain or not? And if we come to our own conclusion that we want to try it, then we don't need to redo everything, right? So if signature is going to be something that we need in every blockchain application, whether it is seed to sale, whether it is a consumer application, whether it is remittance or reconciliation of some invoice, we should just get signature right once, right? Like, we should build in internal policies. And then if I know that anyone's going to come to the table and do a supply chain app, that they're going to have to talk to these 10 people and get their perspectives. Let's just get all those people's perspectives one time. Let's document all of their views. Let's get all of your software down. And then that way, it's more like a request for proposal, right? It's like, okay, we're going to do a blockchain application. We've documented everything for you guys. If you put in a little bit of work here, we can guarantee you that you'll have a chance to run this pilot. So, I don't want to lose track of my thoughts too much, but it's just, I really do believe that, and I hate it to a certain extent. Like, I hate the fact that in this chaos, libertarian, anarchist, maybe Bitcoin world, that we're also sitting here on the other half and saying, we need corporations to validate blockchain. There is a gap that needs to be closed, right? And I'm increasingly scared that in the next year, if that gap continues to grow, we might be left with just the ripples of the Hederas, and that all of this other innovation, all of these billions of dollars piped in, right? Where people are working, and obviously they've been working on hard problems that weren't going to come overnight. They're never going to work together. And not to go on too long, but I would like your opinion on this. I think the common theory, right, if we think of corporations, is say they wouldn't put anything on a public blockchain, right? Like, what sense does it make? Like, they want to run permission private chains. And Paul Brody kind of broke my brain earlier, right? Where he's like, every corporation is telling us they will only run on public chain. And maybe they're selling it to them from Ernst & Young. But, I guess I'm really curious at how to close that gap. And I don't want to go on too long. Obviously, this is like thing I've been thinking about a lot. My thoughts are jumbled, but
Well, I'll keep my comments very brief. So, the thing that happens here is that I think largely speaking, the direction that you're describing is accurate, right? Which is that there have been in this history, there's been a tremendous number of very, very poorly conceived blockchain projects that didn't make any damn sense from the word boo, right? And so, like, is that money wasted? Yes. Are those people burned? Yes. Did the people who engaged in, did they get, they got funded and then they wasted the money? And like, yeah, that happened, and is new money coming after that? No, probably not, right? So there's certain organizations that I think have kind of successfully inoculated themselves from the blockchain virus, and the reality is that those companies aren't going to invest because they've determined, for whatever reason, whether it's ineptitude or whether it's accurate, that they'd have nothing to gain from doing anything further, which is just fine at some level, right? I think that statistically, Bitcoin doesn't care. Statistically, the blockchain doesn't care because it's this epic phenomenon. And when you talk about the timeframes of this year, like, yeah, there's going to be a bunch of startup companies that will probably die off, and Bitcoin and blockchain don't really care. Those individuals care, but like at the end of the day, there may be individuals that feel burned by the whole space. They may never come back. Those could be entrepreneurs. They could be token holders. They could be anyone, right? They could be enterprises. But my point is this, is that these aren't the time courses that matter the most, right? Because the thing that I think we've pointed out is that, there's a generational narrative happening here, and I think that the infrastructure is fundamentally changing. The world is becoming more and more kind of like interested in alternative infrastructure. And I think what we're really seeing out of that is an exponential phenomenon, right? So the point is that, we shouldn't be overly focused on trying to get validation from infrastructure and from companies that may not even exist in a couple decades.
And what do you think is going to happen? Like, sometimes I joke with like my friends or like industry experts. I'll go down coin market cap and I'll just start like naming coins like top 30 later. And I'll be like, can you tell me what this company does? And they're like, like if you look 2 years out, do you think that a lot of these crypto companies that evolved or at least had a token from a fundraising mechanism, do you think they'll exist purely for the trading or the shorting of their coin? Or like if you go 1-2 years out, do you think a lot of the current blockchain companies that have kind of rose to prominence the last few years, like do you think they're going to be around?
No, I mean, I think that probably about 90% of the coin market cap list will probably not be in any meaningful form of existence. The thing that's really weird about blockchain-based assets is that people talk about like stock prices going to zero, which is literally what they do. When a company goes bankrupt, the stock is worth zero, right? But like that isn't actually what ends up happening. What ends up happening in blockchain companies is that they become zombies and they basically sort of go to near zero, and then they kind of like stumble around, in this weird toxic state, where traders make money because they're kind of penny stocks and they just kind of pick up, I have 1 billion of this token that's worth almost nothing, and it went up by 1 trillionth of a penny, and I made.
So are most already dead and they just haven't accepted it yet?
Yeah, a lot of them are already dead. The thing that is interesting though becomes, to what extent do those become listings? And what I mean by do they become listings is that, if you have a failed company, for example, on the Toronto Stock Exchange, you can actually do this wonderful thing, which is kind of a reverse listing, where some functional smaller company buys your company in order to just get a listing on the exchange, right? So, obviously a lot of these tokens have listings on exchanges, otherwise they wouldn't be on Coin Market Cap, which is now a part of Binance, right? So the point being that it's possible that some of these projects will be kind of radically mutated or maybe completely transformed. So for example, some of these projects are sufficiently decentralized that it's not even clear who's running the show. Like if you look at something like Steam, it's unclear whether the community runs the show or whether Justin Sun runs the show. and it's just forked and fragmented, and it's, and obviously it just becomes a wrestling match for tokens at that point of like who bought the tokens and which tokens are actually being listed. And Justin Sun is friends with CZ, so he has the tokens that have the listing, and the other tokens are being delisted. Is Bitcoin SV being listed or delisted? Do you like Craig Wright or do you like Roger Vermore? So all of this kind of like political stuff is just going to be part of this kind of complex future of these different assets. But with respect to kind of, are there meaningful projects that continue to power 90% of CoinMarketCap? I would say, aside from these weird reverse acquisition types of situations, like, I'd say most of them are already kind of walking wounded, and there's a ton of projects. There's a few high quality projects in there for sure. But
do we need a purge so everybody can just like feel like stop talking about them? And
I think it'll happen. I think purges will come, right? Because the delisting is the mechanism, right? So ultimately, delisting is the thing that happens when something is really thinly traded. Is it becomes subject to severe manipulation. So if there's not that much liquidity in a segment, then it's actually a regulatory safety for an exchange to delist it, because someone's going to come in there and manipulate the crap out of that asset. And so, I think from a perspective of exchange safety, exchanges are going to delist things that are zombie assets, and I think that will be welcome. And it's already happened quite a bit, and it'll continue to happen quite a bit.
So what's the Miko top 5?
I won't give you kind of a hardened list of 5, but I would say that the top 2 would be obviously Bitcoin and Ether.
Come on! You can't bat a single at me.
What I look for, I'll tell you what I can look for, right? Which is I like, for example, basic attention token, right? And the reason why I like it is great management team. Brendan Eich is proven. He did a great job with the Firefox browser, with the history. He's the inventor of JavaScript, so he's a super senior person. He's built a browser that I think can actually sell to, if you go out on the street, obviously you can't walk around on the street and talk to people anymore, but like, let's say you could, you went out on the street, you asked someone, if you said to them, faster internet browser with no ads, and more privacy, you didn't even have to say Bitcoin. You didn't have to say blockchain. You didn't have to say cryptocurrency. You didn't have to say Ethereum. Like, you didn't say anything that someone who doesn't care about any of that crap cares about. And if you say it's faster and there are no ads, then and there's more privacy, the user will be like, they'll either be like, that sounds great, or they'll be like, well, I don't care about that, and then you're done. Right. So the point being is that they ship software, it's in production, people are using it, and it's easy to understand. And there's no weird value proposition that has to do with this token scheme, and obviously there is a token scheme, and people using the browser may actually profit off of that token scheme, but it has nothing to do with why the users would benefit from having that browser. So to me, I'm using that maybe as the proxy, which is, I always like projects that have shipped production software that have millions of users. It helps, that's a nice thing.
Well, they're increasingly rare in this space.
Yeah. But look for that. Look for projects with code, with users, with we
were early investors in like HCAPTCHA and what they're doing with the human protocol, and it's like we're seeing it. They tend to do a Cloudflare the other day where they're paying people to kind of classify data sets, right? Like Mechanical Turks, right, through blockchain. And I think when we go to the TCP/IP examples, right? And I think it's a common misconception of blockchain and something that kind of brings me back to a lot of it, which is just, it's invisible. Like, people want to compare this to the internet. I would say it's probably not, right? It's more the pipes of the internet. It's not like necessarily something that's going to be in your face every day, right? And it might even dissuade people from using it, right? Like, we might, when my grandparents, and I always kind of try to look at Bitcoin in regards to my grandparents have always been my test case for technology, right? Like, whatever, just my grandma's like, I don't use smartphones. Okay, she gets a smartphone 6 months later. She only wants to use her I don't use Facebook. And then I go, hey, grandma, you know, I have more information about the family than you do now. I know everybody's birthday. And then she's on Facebook, right? So it's like, I think at some point, blockchain has at least a stigma where if you keep using it as branding, it's not the smartest way to go about it, right?
Absolutely, absolutely. I mean, a lot of companies use AI that way, and they just kind of throw a buzzword and they think it gets them something. But you know, for me, like just to kind of like, you know, put a capstone on it, like, you know, the thing that it is though is its protocol layer, right? So if you think about it, like there's TCP/IP and FTP and like, you know, all HTTP is really pretty important protocol, but like, you know, we maybe haven't even gotten like a web browser that everybody wants to use on blockchain. You know, we have a HTTP browser called Brave, but that's not a browser of these token protocols, the browser of HTTP. So the point that I'm making is it's still early days, but you know, I think that this whole space has a tremendously bright future. And you know, I think that you just have to kind of be patient, and you have to also try to work in areas that kind of make the most sense, and you know, the applications that make the most sense.
Well, with the advice of James Brown and Frank Sinatra, who always left the stage like asking the crowd for more, I'm going to take their advice. And well, I feel like I could probably continue this conversation for another hour or two. Miko, by the way, it's been very nice talking with you.
Yeah,
And
likewise.
hopefully you enjoyed it. The last thing I'll ask, and again, just because I know there's going to be thousands of students watching this. So if you were fast forward, if you could go back in time and you're 19 to 22-year-old today, going to college, you're an engineer, and you're kind of thinking about how you want to approach blockchain, what would your advice be to the students today? Like, how would you think about it? What would be the components that you think they should really like pay attention to?
Yeah. So to me, I would really focus, because one of the things that's happened with COVID is that the planning horizon has gotten shorter. So people's ability to forecast like the future and read what's going to happen in the future is getting shorter and shorter, because there's so many changes that have come that nobody fully understands. Nobody fully understands all the different social change vectors, the health vectors, the government vectors, the monetary vectors, the financial vectors, the stock market, you know, so it's way too multidimensional. So to me, at this juncture, the thing that I would actually focus on the most is I would focus on your daily habits, right? Like, what is it that you do habitually? What are the bad habits that you have? What are the good habits that you have? How do you reach your goals? And how do you kind of increasingly pattern your life so that you continue to be triggered towards stacks of positive habits as opposed to triggered towards stacks of negative habits? Because I think that is going to determine your future and your future success more than anything. And so to me, like, you know, people become excellent programmers by performing excellent programming, you know. And so the extent to which you can get into a virtuous cycle where you're maybe contributing software to an open source project, you're getting peer review, and you're actually getting programmers that hopefully are better than you to tell you how to improve your code, you know, like just getting into systems of behavior and habits that can build your own capabilities. Like, that's what I would encourage people to focus on. And I wouldn't encourage people to focus too hard on kind of 10-year and 20-year forecasts that at this point are like, if anyone can tell you what's going to happen to Bitcoin in like 10 years, let alone 10 days, let alone 10 hours, I would say that they're probably pulling your leg, right? So to me, I would focus on the stuff you can control in your life, which is not like the course of this pandemic disease. It's, what do you do when you get up in the morning? What's your morning beverage? Do you have a drink? Is it water? Is it coffee? Like, are you hydrating enough? Are you like, what do you do next? Do you check your email? Do you like play a video game? Like, what is it that you're eating? You know, so just make sure that you're stacking disciplined, positive habits that kind of can snowball, because that's really what's going to lead you to kind of the most benevolent existence, the most self-supporting, the most exciting, the most positive, constructive, productive existence. is really your habits.
For anyone listening, whether you're a student, whether you're genuinely interested in blockchain, whether you are just tuning in because your friend shared a link, I would encourage you, if you didn't watch this full conversation, go back and watch it. And I was excited to kind of have this conversation before. And Miko, thanks again for giving me so much time. But, you know, I think this is not a small revolution, right? Like, this is a big revolution, right? And we're not going to get there without educating ourselves, without working hard, without getting through these tough challenges, right? We're not going to get there by investing in some token and some random dude who you went to high school with read a white paper and tells you like what the best thing ever is. Like, we need to think for ourselves, right? And for any student watching, obviously you're here because you care about blockchain, and, you know, take parts of this conversation. Not all of them might be for you. Some of them might be, right? And apply them in whatever way you see fit. But if you care about the blockchain space, think critically about it, right? Understand what happened in the past. Understand how that applies to what we're going to go through again, right? We're going to continue to make mistakes. You're going to continue to see things that didn't quite live up to your expectations. And we have to be okay with that, right? And the metric is, are we making incremental progress, right?
So, incremental progress, that's
Miko,
absolutely key.
I want to end this again. I appreciate you again for giving me so much time. Any last thoughts before we hop off?
Yeah, I just wanted to kind of like give references. I highly, if you're really interested in the Bitcoin phenomenon, like, I highly recommend a book called The Book of Satoshi. It's the collected writings of Satoshi Nakamoto, mostly emails, some postings to the Bitcoin Talk Forum and, you know, the Bitcoin user group, etc. So really interesting reading, gives you a strong feeling about the foundation, and it gives you a really strong kind of cultural sense of what the blockchain and Bitcoin movement, where it comes from. You know, if you're curious to kind of follow more of my doings, obviously I recommend that you download the Evercoin wallet onto your mobile phone. You can find me at miko.com, miko.com, and I tweet at Miko Java, MIKOJAVA. So, you know, if you want to continue to like follow along, I'd be happy to have you. And, you know, I'm active on Twitter, so happy to chat with you there as well.
Wait, you just reminded me. So tomorrow I have, or like 12 hours from now, I have an hour-long interview with Craig Wright. What do you want me to ask him?
He's a very challenging figure. I'd really love to know how all those lawsuits are going.
Nothing else?
You know, I mean, I don't weigh in too heavily into that whole thing. You know, I think I tend to be more on the BCH side than the BSV side of that equation. But, you know, being that like Roger Ver is invested in Evercoin. So, you know, I would be reluctant to ask any of the snarky questions that I would be tempted to inject.
Wait, you're in luck though. 2 hours later, I'm gonna interview Roger Ver. Any questions for him?
No, but you know, say hi, tell him hi from Miko.
Perfect. Well, hey, again, for anybody listening, we really appreciate your time, and I think by far this is the longest interview I've done. And thank you again, Miko, for making the time. And
Absolutely.
I really enjoyed this conversation. So, for everybody listening, thank you for watching this interview, and let's continue the next 72 hours of this conference, and let's kill it. Let's build the future that we know we want. If everybody bought $100 of Bitcoin tomorrow, everybody on the planet, the game would be over. I really believe that. Like, the numbers you would see would blow everyone's mind. So push hard, get smarter, educate yourself, and let's see where we all net out. So thank you again, Miko.
Yeah, thanks very much.
Stay tuned to learn more about the state of blockchain education at major universities all around the world. Reimagine 2020.